Can you hear the urgent toll of alarm bells in the financial world? Yet, this isn't merely a typical recession warning. It's a warning of a bigger threat. And this warning comes from one of the sharpest minds alive. Elon Musk has hit the alarm button, and Musk's concern stems from his belief that the forthcoming economic circumstances could be even more concerning than a regular recession. He's highlighting this based on various factors, like the current state of the economy, potential shifts in interest rates, and other economic indicators. Essentially, Musk is urging us to take notice and be prepared for a potentially more substantial economic impact than what a typical recession might bring. Stay tuned until the end to discover Musk's perspective on why the latter part of 2023 and the middle of 2024 might be especially challenging. Plus, we'll delve into Warren Buffett's take on the talk about a recession. Don't forget to hit that like button and subscribe to our channel for more insightful updates. Before we explore why Musk thinks a financial slump could be approaching, let's pause to understand the meaning of the buzzword. What does a recession mean? What exactly is a recession? In basic economic terms, a recession refers to a period when the economy experiences a slowdown and decline. While there's no official formula, economists generally agree that it happens when we see 2 consecutive quarters of negative economic growth. By this description, it seems we might already be in a recession. However, it's important to know that economic downturns can't be fully gauged just by the gross domestic product or GDP, which measures the total value of goods and services a country produces. To truly understand how severe a crisis is, we also need to consider other things, like how many people are out of work, the worldwide supply chains, how much prices are rising, and the state of the housing market. And it's exactly these current signals that are causing concern. They act like early warnings, suggesting that we might be headed into another big problem without realizing it. But before we go further into this coming crisis, let's take a moment to look back at a significant moment in America's past, the Lehman moment. The Ponzi scheme, the 2008 crisis. For many, the unsettling images of frustrated apartment buyers bring back memories of worry. It takes us to a time when the housing bubble burst, causing shockwaves that affected both the United States and the whole world. The marks of that huge event still stay in our shared memory. It was the year 2008, and the housing crisis had hit hard. The memory of bankers facing shame in public and people losing their homes is still strong for many. As people in the financial world got carried away by their own greed, they started giving loans to people who couldn't really pay them back. This reckless behavior was quite similar to a Ponzi scheme, where borrowers couldn't do what they had promised. In the end, this caused banks to stop working and the whole American banking system to fall apart. In response, the government got involved and helped the banks with money. But the effects of this crisis spread far beyond the United States. European banks, which depended on the American financial system being stable, fell apart like a delicate house of cards. While the 2008 recession is in the past, Elon Musk sees the current economic state as reminiscent of that time, maybe even worse. And here's why. What's coming is worse than a recession. Elon Musk's final alarm. Elon Musk suggested that it does appear we're heading towards a recession. In 2023, how severe this recession might be is open to debate. But Musk indicated it could be a mild to moderate one, possibly similar to the downturn of 2009. So he recommends preparing for the worst while keeping hopeful. Musk warns against borrowing money to invest, especially in a volatile market. Also, he advises keeping a good amount of cash on hand. He explains that when the market goes down, extreme things can happen. He gives an example from 2000 when a company called Broadcom, even though it made good products, saw its stock plummet by 97% in less than a year. This caused huge losses for those who had borrowed money to invest. While the company did eventually recover and reach higher levels, Musk's point is that if there's widespread panic in the stock market, being careful with borrowed money is crucial. The economy operates in cycles, and currently, it's overdue for a recession, according to Musk's assessment. He suggests that we might encounter some challenging times for about a year or so, followed by an improvement. Musk's perspective hints at a potential upturn around the middle of 2024. Just like booms, recessions don't last indefinitely. Given the solid growth we've experienced over the past 14 years, a brief decline of around 6 months could help restore balance. The previous instance was about 4 or 5 months, if you recall. However, the situation isn't exactly easy. Interest rates are on the rise, resulting in higher borrowing costs and various other implications. Additionally, the stock market, especially tech stocks, has taken a hit. Numerous growth stocks faced significant drops. Moreover, Musk sounds the alarm bell by pointing out that the chances of the recession taking place are above 60%, indicating that it's wise to brace for the most extreme scenario. During a podcast conversation, Musk quipped, "The only thing that can rescue us from a recession is hope," in a tone dripping with sarcasm, a nod to the fact that hope alone has never been a reliable strategy. But what exactly does he mean when he utters, "Let us hope for the best"? In breaking down this statement, he actually refers to the Federal Reserve as the potential savior, capable of averting a looming crisis and safeguarding the U.S. economy. In essence, he's placing his hope on the Fed to step in and lower interest rates to prevent the worst from happening. However, he doesn't dismiss the possibility of the worst-case scenario, which constitutes a considerable portion of his prediction. It's an ironic twist when the very source of hope counters the anticipated direction. But are we really facing a recession? Or is it that the tech giant and the owner of Twitter, or more recently the X, tends to exaggerate things a bit? Let's take a closer look and analyze the situation. Checking the recession. Is Mr. X telling the truth? You see, Musk isn't the sole voice warning about the impending crisis. According to HSBC Asset Management, the U.S. is poised to enter a downturn in the fourth quarter, followed by a year of contraction, with a European recession projected for 2024. In their mid-year outlook, the major British banking giant's asset manager raised the alarm that recession alerts are flashing brightly for many economies. This situation is further compounded by a misalignment between fiscal and monetary policies, on one hand, and stock and bond markets on the other. Joseph Little, the global chief strategist at HSBC Asset Management, points out that while some sectors of the economy have shown resilience thus far, the overall risk balance now indicates a substantial danger of recession. Although Europe might be lagging behind the U.S., the larger trajectory is, in his view, in sync with recession tendencies. Despite the seemingly firm stance taken by central bankers and the apparent persistence of inflation, particularly at the core level, HSBC Asset Management anticipates that the U.S. Federal Reserve will opt to reduce interest rates before the conclusion of 2023. Moreover, they project the European Central Bank and the Bank of England to follow suit next year. But this is where things get even more interesting and further solidifies Musk's argument. The Fed put a hold on its plans to tighten its monetary policies during its June meeting, keeping its target range for the Fed's fund rate between 5 and 5.25%. However, they hinted at the likelihood of 2 more increases this year. The market is also expecting a slight increase of a 0.25 percentage point in the Fed funds rate by December, as predicted by CME Group's FedWatch tool. Little recognized that central bankers won't be able to cut rates if inflation remains significantly higher than the target, which is the case in many big economies. He emphasized that it's crucial for the recession not to arrive too early and cause disinflation. Regarding the potential upcoming recession, it's expected to resemble the recession of the early 1990s, while the main projection being a decrease of around 1 to 2% in GDP. In a different corner of the economic landscape, another expert mind echoes Musk's viewpoint. The widely respected investor Warren Buffett has observed that the U.S. economy has been experiencing what he terms the culmination of an extraordinary period in recent times. Even Buffett's own company, Berkshire Hathaway, hasn't remained untouched by this transformation. At the annual meeting of Berkshire Hathaway in early May, Buffett conveyed a word of caution. He mentioned that most of their businesses are likely to report lower earnings this year compared to the previous year. This observation distinctly points to the fact that the ongoing economic scenario is undergoing noteworthy shifts and challenges. So, it seems Musk's predictions about the crisis might be accurate. However, instead of causing panic, we'd like you to pay attention to these tips to help you navigate and mitigate the upcoming challenges more effectively. Navigating the incoming economic storm. Practical tips. When it comes to approaching economic challenges, there are some practical steps you can take to prepare. First, think about saving some extra money for emergencies. This can help cover important things if times get tougher. Also, try spending less on things that aren't really necessary right now. By cutting back on those kinds of expenses, you can make your money go further. Another good idea is to spread out where you put your money. This means not putting everything in one place. And if you have debts that charge high interest, it's smart to pay them off sooner. Plus, don't forget about learning new things or improving your skills. That can be really helpful for your career. And if you're able, you might want to explore other ways to make some extra money, like doing a side job. In short, be ready by saving, spending carefully, and learning new things. It's also good to have a mix of ways you use your money. Remember, facing the storm with a positive attitude and being prepared can make a big difference in how you come out on the other side. In uncertain times, being prepared is key. Remember these tips to weather the storm. Like and subscribe for more helpful insights.